Hi, everybody. My name is Eniola Oyebode, and I carried out an equity research on Nestle Nigeria PLC. And okay, so, please, next slide. Next slide, please. Thank you. The investment summary. Okay, so looking at the investment summary, we can see that the company has a strong earnings recovery from its significant pre-tax loss in financial year 2024 to sustainable profitability in the ninth month of 2025. What does this mean? It means in 2024, Nestle lost money, but in 2025, the first nine months is actually making strong profit. Okay, look at we have the portfolio of resilient market-leading staple brands. How does this mean? It means Nestle sells food essentials majorly, and these are even things that people buy during recession, even when people don't really have much money, they still buy it. So we have they pass down their rising input costs to consumers. They aggressively repaid USD dominated intercompany loans. That is, they borrowed some loans from their parent company, but they repaid over 20 million of it. Over $20 million of it. Okay, so the current valuation actually reflects a fair discount. Next slide. Oh, not really next slide. Okay, so the current price versus the target price. So the current price today is 1,780, and the target price that I forecast, that I valued, is 2,303 naira 75 couple, which gives us an implied upside of 29.42%. Okay, so looking at the business model, majority owned subsidiary, like the majority of Nestle Nigeria PLC is actually owned by Nestle SA, which owns 66% of it, and this actually brings strong governance, global expertise, and brand credibility. They manufacture they are in Nigeria, and Nestle actually produce locally, not just importing, thus reducing FX pressures and logistic risks. Nestle also imports to neighboring countries, thereby earning foreign currencies. 80% of key agricultural inputs sourced are actually sourced domestically. These are I'm currently on the operations structure right now. And what does this mean? It means most raw materials come from Nigeria, majorly. Looking at their brand portfolio, one of their products, Maggi is so popular that it became generic. It's like saying Indomie for noodles, and it has lower price to no, which gives it pricing flexibility. Even Milo is a market leader in cocoa drink, and they have other brands like Godimo, Nido, Nescafe, which covers breakfast, drinks, and dairy. So looking at the market strategy, we have this sachet. Okay, so they do their things in sachets, which means small packs called luxury spending for people. We always call luxury spend. I mean, industry now. People always call luxury spending for food, no matter what. And especially during last year, consumer actually trade down protein for seasoning, which actually helped Maggi to grow. And also, the interest rate is around 27 MPR, which also means it has like, I'm talking about the industry interest rate, like the country interest is 27% MPR, which actually cause high borrowing costs, which means Nestle is actually insulated due to cash flow. Let's look at their competitive positioning. Their competitive advantage is scale, brand leadership, export capacity, and local sourcing. Okay, looking at the valuation, I use the DCF, which uses future cash flow, and it's discounted at 21.3% WACC. And the PE actually is a conservative of 18x. And combining this, I actually got 2,303 for 75% as the price per share. So I'm currently on the why should Nestle be bought? Because number one, it is currently undervalued. Number two, operational recovery, strong brand, low FX risks, and cash flow strength. So looking at the risks and decision, the risks are FX volatility, input cost Inflation and regulation. The final decision is buy because the reward is higher than risk. There is a strong turnaround and there is defensive business. Thank you.